Steve, a couple of weeks ago, we saw this come out from Senator Pete Ricketts of Nebraska, and essentially it would cut income taxes on Social Security benefits and make up for the trust fund shortfall by crediting the trust fund with general revenue transfers. You looked into this idea from the broader perspective, historical perspective of taxing Social Security benefits. And we just published this week an issue brief that you wrote. So tell us what you found.
Yeah. So as certainly most Social Security beneficiaries are aware, depending on their income, they potentially have to pay income taxes on their Social Security benefits. A very unpopular thing for Congress to do, but this actually goes back to 1983 and the Greenspan Commission when Social Security was facing insolvency. So this is a long-standing policy that was very hard fought. The idea that we would tax Social Security benefits. And the reason that that's important to Social Security is that we don't just take those income taxes and put them in the Treasury. We also credit those taxes to the Social Security Trust Fund so that those taxes on benefits are an important part of the solvency of the program. So when someone comes along, 40 years later and says, well, this is very unpopular and at the state level, a lot of states will exempt Social Security from the state income tax. Now, of course, the state income tax doesn't go into the trust fund, so there's no damage done to Social Security by exempting them from state tax. But when you propose to get rid of the federal income tax on Social Security benefits, that is will have a huge effect on the Social Security Trust Fund. According to the trustees, on what's called a present value basis, what's the lump sum value of all the taxes that we're going to impose on Social Security benefits? It's about $6 trillion, which is equivalent to 28% of the unfunded obligations of the program. So in other words, the program has a shortfall over the next 75 years. If you repealed the taxation of benefits, you would increase the shortfall by nearly 30%. So this is not a small measure. Now, of course, in the legislative proposal, they propose to replace the lost revenue by crediting the trust fund with general revenue. Now, the problem, of course, is that taxing benefits produces real revenue. The government is running a deficit. So if you repeal the tax and credit the trust fund with general revenue, it's an accounting gimmick. There's no real money there to replace the income tax revenue with. So, it would significantly damage the solvency of the program in real terms, but it would paper that over by pretending to credit the trust fund with the revenue that we no longer collect.
I think that's it's hard to talk about that as Social Security reform. Not exactly hard choices. Tori, you got any questions about this?
I fully agree with Steve on this. It sounds like this is a political piece of legislation, not one that's based in good policy. If for no other reason, if you're not concerned about the whole replacing real money to the trust fund with, fake or accounting money, this is also an unfunded tax cut for a lot of wealthier, individuals who receive Social Security. And that alone should be a problem, right, Steve? Aren't we talking about, because this tax doesn't fall on every Social Security beneficiary, right?
Yeah. So when they enacted this proposal back in 1983, they created a sort of a floor so that your income as an individual taxpayer, you have to have at least $25,000 in income. And then we phase in the taxation of your benefits so that you don't actually hit the 50% threshold, until your income is significantly higher. And then, of course, back in 1993, they added a new threshold, which starts at around $34,000 for individuals. And then we will phase in the tax up to 85% of your benefits. And that money actually goes to the Medicare Trust Fund. Mm-hmm. But essentially, if your income is below $25,000 or $34,000, you don't pay the tax, and if you do, it's at a lower level, or a smaller percentage of your benefits are taxable. So yeah, it's a very progressive policy where, we exempt. I mean, I think the last time I looked at the numbers, about a third of Social Security beneficiaries make so little that they don't pay income taxes at all. Another third, they pay taxes, but they're below those thresholds. And then the other third are above the thresholds and pay taxes on their benefits. So, currently, the proposal only affects, a minority of all the beneficiaries.